Ladies and gentlemen, good day and welcome to Rico Auto Industries Limited Q4 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Hazel Rathod from Essential. Thank you, and over to you.
Thank you. Welcome to Rico Auto Industries Q4 FY23 earnings conference call. From the management, we have today Mr. Arvind Kapoor, Chairman, CEO and Managing Director, Mr. Kaushendra Verma, Executive Director, Mr. R.K. Miglani, Executive Director, Mr. Rakesh Sharma, CFO, and Mr. B.M. Jam, Company Secretary. Now, I request Mr. Arvind Kapoor to take us through the key remarks. After that, we can open the floor for the Q&A session. Thank you, and over to you, sir.
Thank you. Good evening. My name is Arvind Kapoor, and I also have my colleagues here, Mr. Verma, Mr. Miglani, Mr. Rakesh Sharma, Mr. Jam, Mr. O.P. Agarwal, Mr. Sanjay Bhatt, who is the marketing chief, and Mr. Sundar Singh, and Mr. Jagdish. We are all in the same conference room. I welcome you all to the quarter 4 23 and also the financial year 22-23 earnings call. Good news is that India is almost the third largest automaker in the world. We just overtook Japan, but I think it's just about the same numbers as Japan, very close to them. And to become the second, I think it'll take us a couple of years because US is almost 4 times or 5 times this size. But I think we are heading towards that. And the other good news is that the GDP is likely to grow by about 7%. And I think that's the good thing that will happen to our economy. We are really fortunate that this would get the Indian economy is doing pretty well. On the company front, the mergers all have been completed and those have been factored in our books, and we've consolidated everything. And this year we've also given a better dividend than last year. On the challenges that we are facing, one is of course the Russia-Ukraine war, which continues, which shows no signs of ending, which I think is impacting the economy of Europe and also many other countries. And besides that, there is semiconductors. The production is enough, but the type of semiconductor that is specially required for a particular vehicle, we do face those shortages now and then, and thereby disturbing the whole production run for Maruti and also the other automakers. And that also has an impact on the total volume that are produced. And the good point is that the Indian government is supporting it, and there is a large investment that are taking place in the semiconductor industry. And we are hoping that in the next 3-4 years, 5 years, we would be less dependent on outside. I won't say self-sufficient, but we'll be less dependent on the imports that we are totally dependent on at the moment. We also have an issue as far as the crude oil is concerned. The fluctuations can be seen on a daily basis, and we are hoping that these prices stabilize. But we feel that this is probably the direct impact of the war that is taking place. In the EV space, we do see changes happening. There are a lot of companies which are we see more and more vehicles being sold in India, even though there are some challenges as far as subsidies are concerned in India for the two-wheeler industry and also for the car industry. There are some challenges and there are some reductions which have happened, and we will see what is the reaction of the reduction of subsidies in the two-wheeler industry probably in the next quarter. There have been some challenges for the two-wheeler industry, the electric vehicle industry. On the regular motorcycles and scooters, the IC engines, we are hoping that this year would be better than last year. And we did see some improvement in the two-wheeler industry volumes last year. We're hoping that this year there will be further improvement. That is the expectation that most of us in the industry have. Commercial vehicles, fortunately, are doing very well. Passenger vehicles are also doing very well. The waiting is still there, but we've noticed that the more expensive the vehicle, the more the waiting there is. And we hope that this waiting comes down, because the other thing we noticed is that the customers have started actually looking at vehicles which are in the category B or category C in the C sector. The cheapest vehicles that were sold are available off the shelf, and the demand is on the lesser side, but the better vehicles, and so that shows that the aspirations of people is actually going up, so which is a good sign. And this is what happened in China. This is what happened everywhere else. And we are hoping that this year would be a good year. This last year that we are discussing today, our sales did go up by 24%, and we clocked 2320 to 2,020 crores. But I would like to apologize here. In the conference calls, we had spoken about 2,050 crores and 2,350 crores. And in some calls, we had also discussed 2,400 crores, that we could be pushing towards that 2,400 crores. We could not achieve it. There were a couple of reasons for that. One is, of course, the shortage of chips. That had some impact. And the other is that we changed our method of shipment for exports. Earlier, we were shipping CIF, US and or Europe. Now, in most of the cases, we have actually started delivering FOB India. So the freight amount has come down. That has an impact of about almost 30 crores in our total turnover. But we did it because the fluctuation in the freight rate was so much that this started impacting the profitability. This year, we are fortunate that we could cross 2,320 crores. Our EBITDA has, if you look at the quarterly result, we clocked 609 crores turnover, and the EBITDA is at 12%, which we had promised that every quarter you'll see some improvement, and we have touched 12%. And we are hoping to retain this for this whole year and also make further improvements in our EBITDA levels. That will also have an impact on the PBT as well as the PAT in the quarterly and the annual results. And this is on the consolidated front. And what we are expecting, the budget that we have for this year, we are expecting a growth of about 15% to 15 to 16%. That's what we have factored at the moment. Even though our internal target is to cross 20% and or be close to whatever we did last year. But at the moment, the visibility is for up to 15, 16%. So we are factoring that for all our calculations. But we can assure you that we will cross the budget that we have factored so far. Our exports are doing well, and last year we were at 460 crores, and this current year in discussion we have touched 504 crores. This is despite the reduction of those 20-25 crores which we had, the freight adjustment that has been done. And in the quarter 4, you see the exports coming down, but the shipments are more because they never reached their destination. So we had to knock off those sales. Otherwise, our exports were inconsistent in all the quarters. That's all I have to say at the moment, and I think we can open it for questions.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Kunal Patel from Equilligence Capital. Please go ahead.
Yeah. Hi. Thanks for the opportunity, sir, and congrats on good set of numbers. Sir, first question is regarding exports. So you said 122 crores is FOB number, right?
Yeah. Now, you're not very clear.
Yeah. Can you hear me now? Clear?
No, I can hear you, but it's mumbled up. Now carry on.
Oh, okay. So, sir, my first question is regarding our export numbers. So you said 122 crores for the quarter, but that is FOB, correct?
Yeah.
And that is compared to what was it last year, same quarter?
Some of that is FOB. Yeah, FOB started in the month of February, so it is not complete amount is FOB.
Okay.
Some amount after this is FOB.
Okay. So for FY22 and FY23, what would be the comparable number if I exclude the freight cost?
So it will be, previous quarter should be around 110 or so, I think.
See, I think the total freight comes to about almost annual basis. It comes to about almost 35 to 40 crores. And
35.
And in the current year, there would still be some shipments which will, where we will be paying for the freight, but the customers are not agreed. But by and large, most of the customers have agreed to on FOB terms.
Okay. Clear, sir. Sir, how is the situation in US now? Are you facing any problems there, like it was there in last quarter? Are there any delayed shipments or any other problems?
No, that has improved a lot, and because of that, for the quarters before this, say 2 quarters before that, 2 to 3 quarters, there was a problem as far as the delays at the ports was concerned. That is not there anymore. So, but when the shortages were there, when the delays were there, we actually made more. We were required to make more shipments so that our goods are there in time for the customers, and so that we don't have to use any premium air freight. And as a result of it, so we later on at the end of the year, we had to taper down the shipment so that we don't have excess stocks in the US.
Got it.
The situation is good now, and the situation there are not many delays that are happening there.
Understood. So my second question is regarding Toyota. So how is the capacity ramp up for Toyota? I remember you said they have asked us to ramp it up by another 50%. So are they asking for another ramp up? Or what is the current commitment? Based on the current commitments, how much of revenue can be generated from Toyota in FY24 and 25, if you have any number?
At the moment, we are running on full capacity, what was factored at the time of placing the order. And now the further enhancements that they want, we are working on that, and that would start, I think, another October. Yeah, that is supposed to start in 2025.
Okay. Sir, how much revenue are we generating from Toyota right now, roughly? Sorry, I couldn't hear you. Hello.
So this will be about 110 crores now, and it will go up to about 135 crores.
Okay.
Then we will be adding ISIN to this, which is also going to Toyota, which will ultimately go to Toyota, but it's a Toyota program. That is for the e-transmissions. That also would be added from. That's from next year. That is from 25 again.
Okay. So can you talk about new orders inflow this quarter and any related and the related segment, that is electric vehicles and ICE? So if you have any split of the order book.
Can you repeat your question again, please?
So can you talk about the new order inflow this quarter? Also the split between EV and ICE.
Just a minute.
53% EV.
Okay. Out of the total orders that we already have, confirmed orders that we already have in hand, for which for some cases we already started making investments. The 53% of the total orders we have in hand are EVs and balances for the IC engine. And but that also includes the wheels, etc., for motorcycles, etc., which would be about 21%.
Okay. And what is the total order book?
380 crores per year at the peak time. Program value would be about 1,900 crores.
1,900 crores. Okay. So incremental 300 crores of order book orders we have last quarter. So 1,600 was in Q3, if I remember correctly.
Yes.
Balance is in everything.
Okay. And final question, sir. What's our guidance for FY24-25 given the visibility we have both for top line and margins? You have already alluded some 15-16% growth. So if I do a rough math, that comes to around 2,700 odd crores. If I remember correctly, in Q3 you were targeting some 3,000 odd crores. So why there is downward revision of guidance, and also you can talk about margins for next year.
We were always talking of for the next year. We were always talking around 2,800 crores, but now it's coming to about 2,700 odd crores. But let me tell you, this is the visibility we already have in hand, and we will definitely exceed it, and hopefully we'll cross 2,800 crores. But at the moment, we are committing 16% growth that will happen this year.
Okay, and on margin, sir?
Also realize that the freight which we have reduced, that would do about 30-40 crores, I think, would actually be knocked off in the sales in any case.
Got it, sir. And regarding margin, sir?
Margins, see, in the last quarter of the previous year, we did have a margin a bit of 12%. We hope to retain it, and we hope to do even better. Like we promised last year, every quarter you will see the results getting better. We are hoping to work hard and also improve the results and make them better.
Understood. Thank you so much, sir. I'll come back in the queue.
Yeah, thank you.
Thank you. Next question comes from the line of Darshil Javeri from Crown Capital. Please go ahead.
Hello. Thank you so much, sir, for taking my question, and congratulations on a great set of results, sir. So I just we've done fairly well right now. So I just wanted to ask, are there any other non-core assets that we can monetize and reduce some of our borrowings or something? Is there like some land asset or something that we could potentially help reduce our borrowing costs that can improve our profitability?
We spoke about the land bank that we have in Gurgaon. We have a large factory running here at Gurgaon, which is a very prime location. It is on the Delhi-Jaipur highway, and this is about 27 acres, approximately 27 acres. And we have been talking about this, and even in the earlier conference calls, we had mentioned about this. And we are actively looking at somebody who can. We need a person who can give us a fat check. So that is the important thing. And a single check. We don't want to break up the amount, and so we are looking for. We are already in the market for that. We are discussing with various people who could be investors here. And as the information comes in, we'll certainly let you know.
Okay, thank you so much, sir. And so with regards to the defense orders that we've been looking forward to, so what would the timeline now be for those?
See, we have been on defense for the last almost about 8 years now, 8 or 9 years. And but let me tell you, the process is very, very tedious to change the mindset of all the people in the army, the generals, and also people down the line, and the public sector undertakings, and also the Ministry of Defense. Very, very tough, but we are on it, and hopefully, I think there will be a good breakthrough. Probably in the next quarter, we'll share some information with you.
Oh, that's very heartening to hear, sir. So thank you so much for answering my questions, and all the best, sir.
It requires a lot of patience to deal in defense.
Yes, I can only imagine, sir. Yeah, thank you.
Yeah, thanks.
Thank you. Next question comes from the line of Anand Agarwal from Balaji Investments. Please go ahead.
Yeah, Kapoor Saab, first of all, very, very congratulations for the wonderful set of numbers. I hope you remember. So, hello, can you hear me?
Yes, I can hear you and we remember you very well.
Yeah, so nice of you. So, I think most of the questions have been answered. So, just one question. I mean, as far as this EV is concerned, if I remember in Q3, you were of the view that the EV contribution will increase going ahead. How do you see this year, and how do you see the EV contribution this year in terms of the revenue percentage and the margins?
See, the EV is definitely will be growing, but it will be growing at a slower pace than what many other people were discussing or talking about. Primarily because of the problems as far as charging, etc., and also the cost of the vehicle and the cost of the batteries. And the EV vehicle has got to come down in price to the price of the normal IC engine vehicles. That's the time it will actually truly take off. And but we are constantly working on EVs and also picking up orders on the EV. If you notice the new orders we picked up, 53% of them are from are in the EV space. EV, we are also including the hybrid vehicles, which is also in huge demand now. And so we are very fortunate to be in that space, supplying to Toyota. And soon, as the volumes pick up and as the availability of components to Toyota is made available from Japan and from China, I'm sure this volume will be almost double of whatever we are producing today.
How do you see? I mean, just want to know a broader picture, 3 years.
It will now the two-wheeler space will definitely be faster than all the other vehicles. I think that sector will keep on picking up, unless of course the subsidies are absolutely removed because of whatever issues that have come up between the government and some operators here in India. And but the EVs will continue despite the subsidies. The subsidy EV will still sell. And hopefully in a couple of years' time, the battery prices will come down, and hence the cost of the vehicle will also come down, as far as the scooters are concerned. Then we'll see a lot of changes happening in the bus space, mainly because the state governments are investing in the buses, the central government supports it, and even the buses are expensive, but the state governments can definitely afford it. Primarily, they are doing it for improving the general pollution levels in all the large cities. That's the reason that the investment will take place. The car space and others, we feel that it will take a little longer than firstly, you see the aggregators actually getting into the EV space. Those are the taxi guys and others. And the private sector, it will be a second vehicle to start with, but once the maturity level is achieved as far as these cars are concerned, I'm sure the cars will also start picking up. By 2030 in the car space, we expect, I've always maintained it will be 15% plus minus 5% would be in the passenger vehicle space.
Okay. One last question from my side. This, just want to know a broader picture for next 4-5 years. Can we have a kind of a 5,000 crore revenue company maybe 5 years down the line? Since we have a huge population of 140 crores and since EV and everything is there, so can we see that kind of growth?
5 साल तो बहुत ज़्यादा होते हैं, but anyway, we should achieve it.
5 years, Kapoor sahab, 5 years I am talking about.
वही बोला 5 साल तो बहुत होते हैं. 5 years is a long time. We should achieve it. Hopefully we should achieve it before that.
Okay. Thank you so much.
Yeah.
Thank you.
Thank you. Next question comes from the line of Mukesh Modi from Modi FinCorp. Please go ahead.
Hi, good afternoon, Kapoor Saab and the team Rico for the excellent performance. Most of the questions have been asked, sir. Only thing, sir, this year, what will be our capex? Last time you said it will be very less, but what kind of capex we envisage for this year?
Just one. Yeah, depreciation is about 110 crores, but the capex investment, the same, I think we are including the maintenance capex. We think it should be in the region of about 55 crores.
How much, sir? 55?
About 55 crores. And in the current year, we are talking the current year.
Current year, yes, yes. So, sir, are we expecting any reduction in debt repayment for this year?
Reduction of?
Debt repayment? No, debt repayment is going as usual, but debt amount will start coming down from end of this year.
By end of this year?
Yes.
Oh, okay, okay. And other, sir, you said that you are in a talk of the land acquisition and all, but sir, any ballpark timeline? Are we expecting to be finished in this first half of this year? Will it be?
This is a long-term thing because there's a plant which is running here. There are almost 2,500 people working here, and the shifting would take. We would once we reach an agreement with somebody, we will start vacating it after that, and it will be a cycle of almost 1.5 years before we can vacate the place.
It will take 1.5 years, huh? Okay, okay. I think most of them are answered. Thank you very much and wish you all the best, sir.
Thank you so much.
Thank you. Next question comes from the line of Krishna Kukureja from Lucky Investments. Please go ahead.
Yeah, hi sir. Thank you for giving me the opportunity. I just had a couple of questions. Firstly, on the gross margins for Q4, we've seen aluminum prices come down, but don't quite see the effect on the gross margins yet. What would be your insight here? Where can we see this go in the next couple of quarters?
आपको जरा ऊंचा बोलना पड़ेगा, please.
Yeah, sir. Can you hear me? Yeah, first question is on the gross margin, sir, for Q4. Even though aluminum prices we've seen come down, the effect on gross margin wasn't seen as much. So what is your insight on that? Can we see gross margins come down further from here? And how come the gross margins are much higher in this quarter?
Yeah, because the average aluminum rate of the previous quarter was, as compared to the current quarter, is average rate in the current quarter of the RM is more as compared to the previous quarter. That's the reason.
The overall prices have come down, but there was a slight kick in prices in the last quarter.
All right. Okay. And so for the capex for this year, you said it was 110 crores. Can we get a guidance for what will be in the next year or the year after that as well, if possible?
In the current year, we are, like I said, our depreciation is 110 crores, but we would be investing about around 55 crores would be the investment that takes place. But this is as per the production planning that has already been decided. This is as per the budget.
Okay, sir. Thank you so much.
Thank you. Next question comes from the line of Rikin Ramesh Gopani from Capri Global. Please go ahead.
Hi, sir. Thank you so much for the opportunity. Sir, firstly, I wanted to understand, sequentially, if I compare to Q3, the gross margins are down almost like 400 basis points. So if you could help understand what is driving, because I don't think just the aluminum price increase was so sharp that it could lead to this. So if you could help understand the difference between Q3 and Q4 on the gross margin.
Just a minute.
What do you do with KG के अंदर है?
अच्छा, just a minute. You're talking of Q3 and Q4, na?
Yes, sir.
Yeah. Okay. In Q4, the difference of price of aluminum, the price of aluminum has gone up by 14 rupees a kg. So that's the average price we had for this Q4. That is the main reason for this change that has happened.
But could that explain a 400 basis points change in gross margin, or is there some mix change, or is there some restatement? Because to that same extent, I see other expenses going down by about 300 basis points. So are there any other reasons? Because 14 rupees kg cannot sort of explain such a large reduction, isn't it?
Yes, that's right. In fact, in this quarter, there is the effect of merger also. So our other entity, which normally produces some other commodity, there also prices have increased. So that impact is also appearing here because this is after merger. So your observation is right that because of that merger also there is some impact.
So, sir, how should we look at these numbers now from FY24 onwards, where we see at least now the aluminum prices being actually even lower than what they were in Q4? How should the gross margins trend for you? And at least yeah, please.
Yeah, Q1, the gross margin would be better as compared to Q4. Because there is a lag of 1 quarter. So we will be getting compensated for this quarter's increase in the quarter 1. And this exceptional increase, very minor exceptional increase, but that also will not be there in quarter 1 onwards. So there is definitely going to be a better gross margin next quarter.
Okay. So, but just to sort of understand, there is no impact because of any product mix change in this, correct?
No. No, not much.
The products that we have is a very constant, consistent supply of products that we have. There is nothing else that has happened in the numbers.
Because in a way, even exports have sort of, as a percentage to sales, come down compared to last quarter. So is that also causing some impact in this, you think?
See, there is almost about 17-18 crores of exports which have been shipped from here, but which did not reach the shores of America. So those sales were knocked off. So वो थोड़ा impact तो उसका भी तो होता ही होगा because raw material has been consumed. We've already made the shipment from here, and till the sale is made to the customer, it is not booked.
So that gets slipped over to Q1 because it got then shipped and sold in Q1.
That will happen. ये हमारा चलता रहेगा because at the end of the quarter, whatever shipments have been made, those are knocked off in case they have not reached the customer.
Right, sir. So just secondly, in terms of your sales outlook for the next year, this growth of 15-16%, do you see both domestic and exports delivering similar kind of growth, or what is your sense?
Their growth will be in both in the exports as well as the domestic industry as well. More so, I think it will happen more in percentage-wise, maybe equal in for the exports as well as the domestic. But number-wise, definitely domestic will be larger.
Of course. Understood. So both the segments should deliver similar kind of percentage growth in FY24. Sir, next question is to understand the capex that you have delivered in FY23. At least from our interactions over the last 3-4 quarters, the understanding was that you will spend about 50 to 60 crores capex in this year and next year, given the capacities that you already have in place. In that context, you spending 200 crores in this year and actually debt levels going up. If you could throw some more light on the reason for the same, and how confident are you that next year will not be more than 50 crores? Hello?
Just a minute.
Sure, sir.
If 22-23 was mainly for Toyota, that's what we had done. And subsequently, there was carry forward of almost 60 crores, which we kept on pushing till the last minute, which we carried forward into this year discussion, under discussion. And this particular year, running year now, for 23-24, 2024, we are talking of 55 crores as an investment. Now, this does not include the investment in dies. And dies are in some cases they consume within 3-4 months. In some cases they might last 1 year. And very rare cases they go up to 2 years the life of the dies. So, but that is a constant thing that we keep on investing to keep on running a machine. We need to upgrade the dies that are running regularly.
So, if you were to include that as well.
These dies in any case are amortized, we get, and in some cases we get advance from the customer, advance payment for the dies, like Toyota and Renault and others, they give you advance payment, and Maruti क्या करता है? Maruti amortizes and Kia करता है? Kia is upfront again. So Hero is amortized again.
Okay, so if you were to incorporate that also for next year, then including that, what would be the capex number? 50 crores you said.
Another 35-40 crores.
Okay, so all including it could be about 100 crores kind of a capex. So in that, just a follow up here, you given what you are seeing in terms of revenue growth and margins, you could end up with at least 300 crores kind of an EBITDA and possibly therefore reasonably strong free cash flow. Then what will restrict your ability to reduce debt in this year?
No. Our first attempt will be to reduce the debt. That's very clear. And we are hoping to do better than whatever we did last year. And the EBITDA margin would be definitely around 300 plus. That's what we're hoping to achieve. And so whatever extra cash available, that we're going to knock off the debt. Very clear in that.
So there should be a reasonable reduction in debt that we should expect in FY24 as well.
You see that, yes.
Understood, sir. And just one last question, which is on the tax rate. So how do you see the tax rate going into FY24 and 25?
Yeah, tax rates, like last time also we explained, if you see our cash outflow on front of taxation is quite low. But deferred tax plays a definite role. And one good information is that after merger, in many companies, there were carried forward losses, which will be adjusted in future years. So that is why this quarter also you would have seen a reduction in tax percentage as a whole, because deferred tax has again been calculated and there is a benefit on that account. So because of deferred tax, there is going to be a reduction in the tax expense as far as cash outflow is concerned. But on the face of it, it comes almost the same, like 30 to 34%. But within after 2 years, I think we will be able to adapt to the new lower tax regime. So till that time, we will be utilizing the benefit of whatever carried forward losses or MAT credit is there. So it is like I said last quarter also, it will take 2.5 years time to absorb all those whatever benefits are there. So after that, we will adopt 25%.
Understood, sir. So just one last question, which is, given the current quarter's performance, where you have seen, despite some inflation in raw material, you were able to deliver, strong operating margins. Now, with raw materials going down into the next year, is there potential for you to see further improvement in EBITDA margins from what you have reported in Q4?
That's the statement I made, that we would certainly like to retain whatever we've achieved and maintain whatever we've achieved. But our internal benchmarks are even tougher than whatever we had done last year. And we are hoping that our margins should be better quarter and quarter.
That is great to hear, sir. Thank you so much and all the best. Thank you.
Yeah, thank you.
Thank you. Next question comes from the line of Aman Vij from Astute Investment Management. Please go ahead.
Good evening, sir. It was nice to read the presentation this time. Just a request if you can release the presentation a little earlier.
Beg your pardon?
The presentation, it was released after 4 p.m. So the presentation was good, but if you can release it little earlier, that will be good.
Yeah. We realized that, and no, what time was it on?
So 10 or 15 minutes before.
No. I think we did falter in that. Next time we'll try to do it around 1 o'clock in any case. Yeah.
Sure. My questions is on the defense business, sir. So last time you had explained the issue in electronic fuses, tender and all those things. So can you give an update? Has the trial for the summer time started? When can we expect some orders in that?
That tender, finally, I think our voice has been heard. The preference that was being given to the public sector undertaking, that has finally been withdrawn. And so now that we think that there's going to be re-tendering on the fuses because there was a lot of monkey business going on there, and a lot of support that the current companies are getting from the government, despite the fact that there was a failure of almost 40% of whatever they used to produce, and so they were actually putting our defense people who are on the front lines to their lives to danger by supplying fuses, where only 60% bus and 40% would not perform. So finally, I think the army also realized that, and the government also realized that, and I'm sure the PMO was also, because we marked copies to anybody and everybody, because we wanted fairness in the whole system. And so finally, that has been done. And I think the tender is going to be, there's going to be a re-tendering that will take place.
And sorry, when do you expect some this tenders to open?
And then the last time it took about 4 years for them to even come to this stage, but now I think it's going to be done on war footing, and the decisions will have to be made within months now.
Okay, so do we expect some in this year, sir, or FY25 only?
The tendering मेरा process हो जाएगा, but the allocation of business वो मतलब उसको तो साल लग ही जाएगा, because then the trials and everything will start again.
But sure.
That is as far as the fuses are concerned. But there are other things that we are also offering, and I think in the next quarter we'll probably make some announcement as far as those things are concerned.
Yeah, we have bid for some of the other products. So hopefully we'll win something. So just one final clarity on this fuse. So you used to talk about 6,000 to 10,000 crore opportunity, but in the presentation now we are talking about 3,500 crores only. So any reason, has the tender size reduced? Has some of the tender gone to the public sector companies? Why the number is reduced?
See, those tenders got split up. First it was 10,000 crore. Then it got split up into 3 different categories after the tendering had been done. And they took it from us in writing, and they knocked off some fuses which are actually outdated and not actually required by the government. I don't know why they even tendered those fuses. And then subsequently they broke that up also into electronic fuses and the other fuses which were there. So they kept on splitting it up because this is the first time that they had come up with such a large tender and for Make in India. And there was total confusion as to what is to be done. And so that's the reason it's taken so long, and they kept on changing. And the government also kept on vacillating as to what is to be done in this thing. It was very disappointing because every quarter we'd hear something new that was happening. And then subsequent, at the end of the day, when the Prime Minister and everybody got involved, that Make in India is a must, and they started pushing these authorities to place the orders and to actually produce everything in India. That's the time they started waking up, and that's the time everything started opening, and that's where we are today now. Hopefully, in the next couple of months, you'll see the re-tendering and all that taking place.
So, sorry, sir. These trials will have to be done again, the summer and winter trials.
Of course. The steel prices have gone up. We are going to reprice it again.
Okay. So the whole trial scenario will happen again. You are saying that.
They'll go through the product cycle again. We have 1,000 fuses lying here, and we want them to actually try those out. We said, you please pick up any one of the fuses that we have, and there will be 99.9% fuses will work. But please try them out. So that's the challenge that we are facing.
Sure, sir. These were the questions. Good luck. Thank you.
Thank you. Thanks so much.
Thank you. Before we take the next question, a reminder to all the participants, please restrict yourself to 2 questions. Next question comes from the line of Ashwin Agarwal from Demeter Advisors LLP. Please go ahead.
Good evening, Kapoor Saab and your team. Congratulations. Very nice number. So, on the capex side, I think there have been a lot of questions back and forth. I just want to clarify. So, it will be total of 55 plus, let's say, 35, 40 crores for dies. So, the total capex would be less than the depreciation of this year. Would that be a fair statement to make?
Yeah, absolutely. But dies, those are amortized, and so we do claim the money from the customers.
Okay, so that's not part of the capex that you capitalize.
No, we capitalize that also. So that is why sometimes you find gap in what we say, that this is the plan of capex and what figures you see in our results, because there are different dies. If these are amortized, then we capitalize those dies. And if it is upfront, then it is not capitalized.
So let me ask the question differently, because all of us are financial analysts, and what we are really looking to figure out is that when we look at our cash flows, so this year, for example, the capex number was 200 crores, right? So what would be the comparable number in fiscal 24? Would that be 55 crores? Would that be 90 crores? Or would that be a different number?
I think from that angle, it should be around 100.
100 crores, less than 100 crores, including the dice, yeah.
Okay, perfect. And sir, again, congratulations and thank you for increasing the payout ratio on the dividend to roughly about 21%. What's your thinking? Because now you're entering the phase where your capex is going to be less than depreciation, and hopefully cash flows will increase significantly. So some will go towards debt repayment. But where do you want the dividend payout ratio to stabilize that?
Well, on the dividend front, we actually have an announced policy which we did about almost 15 years back, and in that we declared that up to 30% would be the payout.
Okay, perfect. Okay, all right. Okay, those are my 2 questions. So thank you so much and all the best for the future.
Thank you so much, Ashwini.
Thank you. Next question comes from the line of Suraj Nawandar from Sampada Investments. Please go ahead.
Hello, sir. Good evening. So I just had one question that we have been pursuing this defense opportunity for quite a few years, and you also alluded in the beginning of the call that the process is very cumbersome, slow, you need a lot of follow-ups. So my question is, what is giving us this motivation to go after this opportunity so so hard? I mean, is it diversification of the revenue that is we want to achieve, or is it the better revenue visibility, or what it is that is driving us for this opportunity so hard?
Now, are you talking about defense?
Yes, for defense.
Oh, okay. See, defense is a big opportunity because the amount of money that government spends in defense is incredible. And the amount of goods that can be actually made in India, we have the technologies in India. Now, the thing is, at the moment, the wall is the bureaucracy which is there in front of us. Fortunately, we have a very small team of 2 or 3 people actually who are leading this. And of course, we have a lot of consultants and others who keep on supporting us on this. And the motivation is primarily, of course, to serve a country, to supply something to the country which is going to be at almost 1/4 the rate of whatever they import at, and give them as good, if not better quality than whatever NATO standards and or any other standards are, as far as the fuses are concerned, and also the other equipment which are required by the government concerned. So it is another line that we wanted to develop, where once it opens up, once the regular supply starts taking place, then it's an ongoing thing which will carry on again and again. Because if I talk about the fuses, the army for training, etc., and there is a life, there's a shelf life for everything that is there, and they keep on utilizing all these bombs, etc., and there's always a replacement that keeps on coming. And hopefully there is nobody wants a war, and hopefully there's no war. And the other opportunity is once we start supplying to the government here, the exports also open up. The government is very open on the export front. So we are looking at both these opportunities. And so the kharcha that we have been doing in the last many years is within limits. It's not that we are going over the top to actually spend the money. And to give you an example, even these 1,000 fuses, which would cost a couple of crores of rupees, the understanding was very clear. After the fuses have been tried, only after that the payment will go. Very clear. So we don't really engage in spending too much money and as far as the defense is concerned. But the investment will start once the orders come in hand.
Okay, sir. Thank you.
Thank you. Next question comes from the line of Pritesh Chheda from Lucky Investment Managers. Please go ahead.
Sir, my question is on the capex spend for FY23. I still couldn't understand that for the quarter 3 call as well as quarter 2 call, we had mentioned that the capex number will be 50 crores for FY23 and there will be no rise in debt. But when we look at the year-end balance sheet, it's a 200 crore spent on capex and 150 crore rise in debt. Why is this deviation happened vis-a-vis even the quarter 3 call?
See, one of the reasons is that 4 entities have got merged, and the impact of that merger has come in this. And
those entities were subsidiary of yours, or they were associate or JVs of yours?
No, these were 100% subsidiaries.
So then there should not be any impact, right? We always look at the consolidated number.
Yeah, in consolidated number, those would always
was there.
Yes, yes. So, and another factor was the Toyota project that got capitalized during this year only, and during, if you remember, during
So, but that should also be a part of your CWIP, right? Until you cannot, you started your Toyota project in quarter 3 end. Yeah. And at the end of H1, it would be a part of CWIP. You cannot go ahead and land up spending 150 crores in a quarter's time to complete the project.
No, if you remember, if you remember our Q3 and Q2 call also, we said that during this year Q2 and Q3 capitalization happened. As far as last year is concerned, last year it was not CWIP. Last year these were LCs in the form of LC. So there was no capitalization last year relating to Toyota project. Although LCs were there. So in cash flow it was not appearing as capex. So complete capex of around 50 crores on account of Toyota, that has come during this year only.
But that you would have known, so that you would have known even in quarter 3 call, right?
Yes, yes.
So then how can a quarter 3 and quarter 4 deviate by 150 crore debt and 50 crore capex becoming 200?
If you see our cash flow in Q2 also, with Q3 there is no cash flow statement that would be available. But Q2 cash flow statement, if you see, there also the spending was there. And we explained that during Q2 and Q3, this capitalization of Toyota project has happened. So we can refer to the Q2 cash flow statement also.
I know about the Toyota project capitalization.
Yeah.
But then the commentary in the quarter 3 call was about 50 crore capex only. And when I look at the H1 balance sheet, between H1 balance sheet and H2 balance sheet, there is a gross block addition of straight 100 crore. So either in the quarter 3 we should have communicated on the capex number of 200 crores. What makes me feel is that if you're giving us a 100 crore capex number next year,
yeah,
again can these slippages happen then? Because we will go by what you mentioned in the call, right?
One thing is for sure that last year was a special case because LCs were already there. But this year, as of now, there is no such thing. Only one LC is there.
That's for about 11 crores.
11, 12 crores.
But last year the LCs were, I think, 8 million, but more than 60.
So the 80 crore was in LC.
Yes,
80 crore.
Yeah.
LC in last year. Yes.
Sir, we have to be very careful about this because as a company, we have been a heavy capex spender for past so many years with no corresponding ROIC, and investors here are closely monitoring that number. If any deviation like this has a bad taste with the investors.
Dear,
sir, these are not small numbers.
I agree with you. But if you see our ROCE percentage has also almost, it is now almost 150% improvement is there as compared to the last year numbers. So ROCE improvement is there and that will continue. So if ROCE improvement is there, that is on account of, because now we are realizing the benefits from that investment which was made earlier. So I think you will be better in a position to see the
in quarter 2 and quarter 3 the discussion took place. And all of a sudden there's 100 crore PNL. So what was that additional 100 crore? How did it come about? And will you give any surprises this year?
No. So this year during our talks also we'll take effort to at least keep updated, because Q3 might have been a miss because there is no cash flow statement that is published during Q3. But Q2 it was evident.
Whether the cash flow is published or not, we should declare it.
Correct. So now we'll take care this year that every quarter we'll be updating regarding whatever.
Sir, it's not about an update. It's just about a communication because these figures cannot deviate so much. And about ROCE, we in any case are a sub-ROCE company. We have still reached about 9%, which is like the bank FD rate.
Yeah.
You'll find further improvements are taking place in this.
You are right. Yeah.
So we have to, now we are sure about this 100 crore next year and repayment of debt.
Yeah, absolutely, because we don't have any other areas where we need to invest immediately. And there is no orders which are pending with any supplier from us. And the die casting, there's one die casting machine which is coming, which is very specific to the Aisin project. And that's it.
This asset can support what revenues for us now, whatever is on ground?
45 crore. The current we can actually go up to about 3,200, 3,300 crore.
Okay. And in your initial conversation with other analysts, I still couldn't understand the QOQ GP reduction. So if you do a simple math, there was a 50 crore increase in revenue and there was a corresponding 50 crore increase in the raw material cost. Now, in any calculation that I do about aluminium price rise, it cannot have a situation where the entire 50 crore revenue has a 50 crore cost increase. If you could clarify on that at a later stage, it would be very helpful.
You're talking of Q2 and Q3?
Yes, sir.
Just a minute.
And then there are other companies in the aluminium casting space, your competitors. All of them have shown improvement in gross margin. You are the only company where there is a reduction in gross margin without any product mix change.
परसेंटेज इन कंसोल है स्टैंडअलोन में इसमें नहीं है कंसोल में क्या आता है आरएफएल आता है ये जिन फाइल में है उसमें 70% प्रोडक्ट मिक्स है उसका दोनों का 70% लॉस मार्जिन है if you see our standalone results and console results, so in standalone there is not much of increase in raw material, although there is an increase of around 150 bips or something. And in case of console only there is an increase. That is because of our wheel manufacturing facility, Rico Gen 5.
Because we have started selling the more wheels for the Hero, which has the less contribution margin as compared to the other customers. So that may be the one of the reasons.
In standalone there is increase of in raw material percentage there is increase of 120 bips. While in case of console, what you are talking, you are right. That is 400 bips.
That is the wheel where the raw material content is on the higher side, normally on the higher side as compared to the others. Yeah. But if you look at the standalone, it's about 1%. Yes, 1.1%.
So when we look at the gross margin number for FY24, should we take the gross margin of quarter 4 and look forward, or should we take FY23 and look forward?
I think safer would be to take it at Q4, but it will be better than Q4. So percentage should be less than that. So if it is coming 60%, I think safely we can take around 58 to 59%.
And
the other thing is that there are some pricing increases pending from our customers also in the wheel plant. So that will also have some impact.
And are you seeing improvement in business QOQ? So is Toyota improving? So this 600 crore revenue that we see this quarter moves to a higher number in quarter 1 and then moves to a higher number in quarter 2? That's how we should see your company?
Yes, quarter 1.
Yeah, certainly.
Certainly, right?
Yeah.
Okay. Thank you very much, sir.
Yeah, thank you. And on the raw material front, any other questions, please call us and we'll give you all the details.
Thank you. Next question comes from the line of Bhaskara Patla, an individual investor. Please go ahead.
Hi, sir. Congrats on the good set of numbers. I don't have much questions because most of the other callers they asked actually. Only one question regarding the BMW order, sir. Like I think 2 quarters ago you mentioned that you're expecting some big order from BMW. So is there any news on that?
No, at the moment there is none, but we are waiting for the news.
Okay.
But we did mention that we have got one order already, which comes to about almost 100 crores a year at peak production. That we already got, but others are still pending.
Okay, sir. One last question. Like based on the conversations we had with the earlier callers, it is safe to say that we are going to, for the very first time, going to hit net profit of 100 crores in coming year in our Rico stream. Is that safe to assume?
Well, we will maintain the margins that we've done in quarter 4 and we'll even improve further.
Okay, sir. Yeah.
So if you do your math, if the math is done, then obviously we will be achieving whatever you're saying.
Yeah. Thanks, sir. I don't take too much of your time, and I'm really happy that we did really good in this quarter. I appreciate all your hard work. Yeah. Thank you.
Thank you. Next question comes from the line of Chetan Dhruva, an individual investor. Please go ahead.
Yeah, thank you. Congratulations, Mr. Kapoor and team, on the good results. I have only one question. I'm sorry, it is again about margins. Okay. So this is on the outlook you presented earlier. So I had a clarification that I needed in terms of when you said that you're going to maintain next year's margin, the FY24 current year's margin at current levels. Was it the Q4 or was it the full FY23? Assuming it is Q4, but I thought I should clarify it.
No. We would like to maintain the Q4 margins, definitely.
Q4 margins. So based on your conversation with the previous participants, one thing I could take away is the gross margin itself will lead to 100 bps improvement versus Q4. Correct?
Do the math accordingly, yes.
Yes. So then correspondingly, the margins should be higher. EBITDA margins should also be higher by at least that much for the full year versus Q4, right?
Yeah.
Okay, understood. Thank you very much, sir. That's very positive news.
And on the EBITDA front, if you notice in the quarter 4, whatever we had promised in quarter 3 that what we will achieve in quarter 4, we've actually exceeded that.
Right. I think the main issue was around the GM change and also the depreciation, which was not articulated clearly, but I think we got the message now. Thank you.
Yeah. But the raw material, again, I would like to repeat, it is mainly because of the merger. When in Concall it is coming and is primarily from the wheel plant, Rico Gen 5.
Understood.
But if you look at on the standalone, the percentage difference is only 1%, 1.2%.
Got it, sir. Thank you very much. Wish you good luck for FY24.
Yeah, thank you.
Thank you. A reminder to all the participants that you may press star and one to ask a question. Ladies and gentlemen, we have reached the end of question and answer session. I would now like to hand the conference over to the management for closing comments.
Thank you so much, friends. It's been a pleasure talking to you all. And in any case, if you have any more questions, you're free to write to us, free to call us. We are always there for you. And we will openly share with you, transparently share with you on whatever is happening in the company. And any question on investments and why 100 crore investments were done in a particular period, and and also the raw material front. Any questions, we are open for discussion. We would like to certainly share all the information with you. And the company, we are doing well, and let's hope the war in the Russia-Ukraine war comes to an end. That will give further flip to our exports and also to the other markets. We're hoping things will start improving. And besides that, we are looking at other customers in India as well, so that our growth takes place both in the two-wheeler as well as in the passenger vehicle market. And we would continue to improve on EBITDA levels and also on the PBT levels. And we have a plan already in place, and we are hoping to to show you better results in the next quarter and the quarters ahead. Thank you so much for the call, and please write to us or please call us whenever if you have any questions. Thank you.
Thank you. On behalf of Rico Auto Industries Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.
Thank you. Thank you.